I just received a phone call and I had a nice conversation with a gentleman, and he was saying that he is not interested in actively trading, but he would like a system that can objectively let him know maybe when is a good time to turn down or slow down his dollar cost averaging, and or maybe to come out of index components, and whether or not we had such a system or signals. So I described to him and actually showed him over a live phone chat what you're looking at now. I'm Bagadon at StockMarketCaddy.com, and yes, we trade intraday futures, stocks, options, ETFs, and we trade swing trades aggressively for 2, 3 days. But we also have investment dollars. And let me show you. This is the Russell. The TF is the Russell futures contract. This is a daily, this is a weekly, this is a monthly. Now, we don't talk about this every day because it's a monthly system, but our system, which is the Zinger on the swing machine, is long. And it's been long for 89 months. That's why we don't talk about it every day. You'd be like, we know that. One futures contract, long, 89 months ago, would be up $51,270. The entry price was at 576. The time was 6 o'clock. It was September 30th of 2010. The combined trend is strong. The near trend, the retail crowd, is trending up. The long-term investor crowd is trending up. Let's bring this over. The altimeter reading is all green. So there is no reason to come out of this gentleman's monthly Russell investment if he was in it. But it is worthy to note that he is pushing what we call the second cut high. He is pushing on the highs. But there's no indication yet to come out. What we will see, he would begin to see if he was a subscriber, he would begin to see the altimeter and some of these trends weakening. But long before he sees it weakening on the monthly, if he was a subscriber, he would see it weakening on the daily or the weekly. Okay? So he can really kind of, right now, as a monthly investor, just sit back and enjoy the ride, as he's done for the last 89 months. When you look at the S&P, I don't have the time here in this YouTube, I'm limited in time, but one contract at approximately the same time back on 2010 would be up 88,000. The Nasdaq one contract would be up 105,000. The Dow would be up 86,000. No noise, no banter, no ifs, ands, or buts. A consistent, objective view of the markets, a mechanical view. By the way, the system does not use moving averages. They don't work. They will lag. Much of that profit would be eaten up. But we indicate whether one should be long or whether price is dipping or ripping against the short side, or if one should flat out sell or be short. And so that's how we manage our money. It's how we hedge and wedge, and it's a mechanical, objective view of the market. So once again, if that's something that resonates with you, and at the same time you want to watch on a video how traders look and approach the market and what they're doing, you will see that in our videos. It's not to mean that you've got to play that way. It's not to mean, and what the biggest mistake people make is, one of the mistakes is they're a long-term investor and then they start listening to the traders and the talking heads, and they think that applies to them, and they come out, and then they don't know when to get back in, or they're just totally confused. You got to recognize the difference. There are basically, there's different classes of investors. In fact, we diversify. We think of diversification not in terms of markets or stocks. We think of diversification in terms of time. We trade intraday. By the way, that is a machine order that just went short. Intraday, I hesitate to say intraday. Okay, so we we think of diversification in terms of trading intraday, trading daily, trading weekly, and trading monthly. So we do all three, and it balances itself out. And we try to minimize or negate the overnight risk. But for the gentleman or the people that are long-term investors, there is absolutely no way as a subscriber that you could be subscribing to us and not see the selling and the alarms going off. Now, we have something we call the VIX model, and we do expect there to be a sharp sell-off in just the next few days. But for the long-term investor, if it does manifest itself to be something else, they would see it as a subscriber, but we don't anticipate that. I'm Bagger Don at StockMarketCaddy.com. And again, if this resonates with you, feel free to give me a call. 813-752-8263. I'm not a broker, I'm not a financial planner. I don't want your money. I don't make specific recommendations to buy or sell anything. Think of us as a real-time online investment club. We want to learn from you as much as you want to learn from us. And we're just the mechanism to bring that together. All right? Feel free to give me a call.